Well, I think we're ready to get started for the deep dive this morning. It's Valentine's Day, Monday, February 14th. So welcome to everybody that's joining the deep dive. Always so grateful for you that start your week off with us on the deep dive. We're going to be talking about the second part of what we talked about last week. The rising home prices, and is this all sustainable? Are we looking at another market crash? So excited to cover that topic. Over the last couple of weeks, probably almost 50 slides on this topic that you can use to be the expert as you deliver this message or as people have questions about this. It was Super Bowl last night. Congratulations to the Rams. A lot of Rams fans probably happy. Bengals fans maybe not so happy, but it's neat to be where we're at right now. This Monday morning, maybe a few people feeling the pain of staying up too late last night, but we're going to get started here in just a minute. This question keeps coming up: are rising home prices sustainable, or will we see another crash? If I kind of did a reminder of what we talked about last week, it was starting off with the reality that there are a lot of people that are concerned about this. People in our business are concerned about this. People, consumers that are out there thinking about buying or selling are concerned about this. Study from Realtor.com says 3 out of 4 consumers are worried there's a housing bubble, and that's kind of still persisting. Agents, about half of agents, 44%, say I'm worried about a housing bubble. So this is a topic we want to be educated on. At KCM, what we want to do is we want to give you the visuals that are simple and effective to communicate any message. And if you remember last week, if you didn't watch last week, you can go back on Facebook. If you're a KCM member, all of these topics are archived in the member area with the slides. You can download those, personalize those, use those as you're making a video, you're writing something, or you're putting something out on social media. Use those images. And if you'll remember, last week we talked about home prices, and we said it's all a matter of supply and demand, right? Prices are rising. They've been rising for the last couple of years, well above historical averages. And if you want to look at what's going to happen with prices, it's all about supply and demand. Remember, anytime we have undersupply, we have a tremendous amount of demand, drives the price higher. And using what I talked about last week and bringing the local market perspective to inventory, to demand, is going to give you a picture of what prices are going to look like. Now, I covered what experts are projecting for prices going forward this year. Again, if you didn't see that, go back and grab that and look at last week's deep dive, and you'll have all of this information at your fingertips. But this morning, I want to talk about a couple of things. I want to talk about affordability. Are homes even affordable anymore in this country? And there's a big difference between affordable housing and affordability. Affordability refers to what the dollar will buy in a house. Affordable housing refers to homes on the lower end of any market. And certainly we know that we need more of those across the country. And we need more opportunity for people to buy in, as first-time home buyers at the lower end. Just don't have enough inventory in those areas. We'll also talk about foreclosures, as we come out of last year and everything, kind of the moratorium being lifted, forbearance wrapping up. What does that look like going forward? I'm going to cover that. And then we'll end on equity. The shining star of certainly the pandemic in housing has been equity, so much equity, which the byproduct of rising prices is more and more equity. So we'll cover those 3 topics today. Again, if you want to go back last week, we covered home prices. We talked about supply and demand, and you can get all of that information. But if I start with affordability, here's the position I would bring as an expert. I'm going to give you the information to back that up. And it's this: homes are less affordable today, but not unaffordable. There's kind of this narrative that, gosh, as prices rise, and certainly we're going to see more of, rising prices this year, and we're seeing interest rates go up. We saw interest rates go up dramatically last week, and no doubt people are feeling the cost of buying a home. One of the things I would do right now is start to look at where we were at starting the year, where are we at right now relative to prices, and where are we going, to educate those that I'm working with. But if we think about homes being less affordable but not unaffordable, let's go back and look historically. And this comes from the National Association of Realtors. It's the Housing Affordability Index. If you followed KCM, you followed the deep dive, you're a KCM member, you're well aware of this graphic. The Housing Affordability Index comes out, and the way you read it is the higher the index, the more affordable a home is. So if you look at this, what sticks out? The orange bars in the middle there, those are the years when distressed properties dominated the market, and we know homes were very affordable after the crash because of this, oversupply and dwindling demand. And even in the years following that, homes were more affordable than they were today, maybe on par with 2018. You see there in that dotted black line that goes through the graphic. But where we sit today with affordability, if we look at the years prior to the housing crisis, we're still more affordable today than we were back then. So it's all about perspective. If somebody were to say homes just aren't affordable today, well, the question I always say is, as compared to when? Certainly compared to the last few years, yeah. I mean, homes were more affordable the last few years than they are today, certainly during the housing crisis. But anytime before that, no, we're actually more affordable today. Affordability is based on interest rates, prices, and wages. Okay, and that's what NAR uses to build the Housing Affordability Index. But it gives you a perspective on that, because the bottom line, according to ADAM data, is that owning is more affordable than renting in 58% of the counties across the country, where the median priced home is more affordable than the average rent on a 3-bedroom apartment. That's key. Looking at 58% of the counties where it's more affordable to buy than rent, it goes on to say that means it means major homeownership expenses consume a smaller portion of average local wages than renting. So we're looking at these numbers on average across the country, and that's a positive sign. No doubt as interest rates rise, no doubt as prices rise, that eats into affordability. If you start to look at the amount of income needed to qualify for a home loan, the percent of income on average is still well within the guidelines. Most guidelines say, okay, you can't commit more than 28% of your income to a mortgage payment. And you can see 2020 in Q4, 2021 in Q3, and 2021 in Q4, that number inching up, but on average still below what lenders would say they will allow. Now, certainly not trying to get into the guideline conversation, and your lender partner can help you based on your average loan amount and based on the market that you're in. But again, going back to where did we start the year? Where are we at right now? And where are we going to help educate those buyers about what the reality is in the market today? Todd Tate at ADAM Data said homeownership still remains the more affordable option for average workers in a majority of the country because it still takes up a smaller portion of their pay, what we just talked about. So on average, as you look across the country, homes affordable. Now, if you want to say, okay, what's the other option? It's renting. And going back over the last several years, you see rents are skyrocketing. This is a look at year-over-year single-family rent growth in October of each year. And what do we know? That as we've gone through each year, 2 or 3, 4% rent growth, and then last year rents soaring, okay, going through the roof. And so, when you start to talk about affordability, rents going up makes home ownership certainly much more attractive for those that are renting. Now, not everybody is needs to buy, and there may be situations where they say, hey, we're going to rent, but we want to be the educators on affordability. And I think that's what we need to do today, and really help drive that among buyers that think, I don't even know if I could buy today. Well, let's sit down and let's look at that. Let's talk through that in your situation. The other piece of this conversation that comes up around those that think a crash is coming is foreclosures. And again, I'll say, if you follow the deep dive, you've been along the way for the forbearance conversation. You're well prepared for that conversation. But what about foreclosures as we go into the into the year. We're here in the middle of February, and as we go throughout the year, are we going to see more and more foreclosures come to market as these moratoriums are lifted and things happen? And as always, I want to address headlines that are out there. The old phrase that we've used for the last 2 years is headlines do more to terrify than to clarify what's actually coming or what's actually happening. And this headline, I clipped it out this morning, says U.S. foreclosure activity in January 2022, the highest since the beginning of the COVID-19 pandemic. That came out on February 10th. In that headline there, when you look at that, the highest since the pandemic. Now let's start to look at this. I want to break this down. And this is a look at January of 2019, 2020, and then January of 2022. And these are foreclosure and completion numbers. So when you start to look at this, you can see foreclosures are not surging. Matter of fact, they're well below where they were in 19 and in 20. And if you look at Realty Track, Rick Sharga is somebody that we trust, and we use their information a lot here at KCM. They make their money off of foreclosures. And here's what they're saying right now. It's very important to keep these numbers in context. We're likely to continue seeing large year-over-year percentage increases for the rest of the year. But it's also likely that foreclosure activity will remain below historically normal levels until the end of 2022. And we're hearing that from a number of different sources. So when clients you're serving see those types of headlines, be in front of those, have the facts to be able to inform them on what's exactly happening with foreclosures. Now, I'll give you an update on forbearance real quick. The question always is what's happening to those that are coming out of forbearance. Less than 1 million homes right now on forbearance, but this is as of the end of the year, loans that have exited forbearance. The green portion there, 38% are paid in full. I always used to say these aren't people that took forbearance incorrectly. They took it saying, I don't know what tomorrow will hold, and they didn't need it. They either made their payments, they paid off their loan, or their past due payments were brought current. Those in blue went through some sort of workout with their bank. Think about that. They went through a modification, maybe a rate and term refinance. We know that certainly was an opportunity over the last couple of years. Or they went through a deferral, 29%. They tacked onto the back end of the loan. Banks would do anything to not have 2008 happen all over again. And you're seeing that play out. The bottom line here in forbearance is 4 out of the 5 people that are exiting it are exiting it in some whole scenario. Either they paid them off or their bank, made a workout. 18.2% are still in trouble. They either have no loss mitigation plan or they're already in some sort of deed in lieu, short sale, or some type of transaction that way. But the overwhelming majority are not in trouble. This is really, really important. I know I've covered it a lot, and many of you have been on many deep dives and many calls where we've covered it at KCM, but continue to remind people this is what's happening with foreclosures across the country. And don't fall prey to the curse of knowledge. Just because you know that, don't assume that the buyers and sellers that you're working with or those that are concerned about this know that as well. Because the bottom line is that foreclosure activity is at an all-time low. This is a look going back to 2005 with U.S. properties that had a foreclosure filing according to ATTOM data. And you see the kind of the peak there in the housing crisis and where we've been coming into 2021. Now, the reason I bring this up is as we go forward, we're going to start to see, these stay. I'll use a quote here in just a minute from CoreLogic where they say quite low. What do we know coming out of the housing crisis? Lending standards have gotten a lot tighter. It's become harder to qualify for a home loan. We know back in the housing crisis that you didn't really have to qualify for a home loan, and I'm not going to go into that. But if you're in the business, you understand that. And so we see these delinquency rates going down because more money has to be put down, because you have to qualify for a home loan, and expect that to play out. Here's a quote from CoreLogic I just mentioned. We may see a bit of an uptick in foreclosure rates in 2022, but just an uptick. From an extraordinary low level, we're not expecting to see a big increase. We expect delinquency rates overall on home mortgages to actually continue to remain quite low. Going back to this picture, remain quite low, in the words of CoreLogic. So we're seeing that from Atom data. We're seeing that from CoreLogic. We can see it in the actually visually in the information that's being shared. And I think this is important that we bring that up for the clients that are maybe concerned about, gosh, I see prices rising. I see interest rates rising. People aren't going to be able to afford these homes. So they go to sell them. They're going to lose value. And all of those questions, being able to be the educator is what's key here. Also, do me a favor on this. I want to pause for just a second before I get into equity. I'm going to wrap up with that here in just a second. Share this information with somebody you've talked to in the business. I just mentioned is that we started out that half of agents, 44% of agents think, you know what, we're looking at some sort of bubble in the market. I'm worried about that. Share this information with them because I know it will help them as they look at what's happening in the market. Let's talk about equity just for a minute. I mentioned before, it's been certainly the shining star of home ownership through the pandemic. The result of higher prices is more equity. I do believe it is the topic. If you're talking to those thinking about selling, this is the key. How can we leverage equity in our home for what we want to do? Maybe that's downsizing. Maybe that's moving up. There's a number of different things. Maybe that's investment, whatever that is. Using that equity for the way that homeowners want to use it is the name of the game today. According to CoreLogic, in the third quarter, $57,000, the average gain in equity in a home. 31% is the percentage of increase of homeowners with a mortgage in equity, and 3.2 trillion increase in dollars in equity in this country. So we see all this rising. We see the rising prices across the country. We see all of this happening. And people say, you know what, I'm concerned. I don't know if I want to buy, quote, at the top of the market. I'm concerned about that. I want to give you probably one of the most important graphics that I would keep on my phone, I would keep handy when that question comes up. And it comes from the Home Price Expectation Survey. And between here and 2027, the amount of equity someone stands to gain by buying a home today is just over $89,000. So those that think, would I want to buy at the top of the market? I would say, well, you're going to gain $89,000 between here and 2027. That is not the top of the market. And if you look at the Home Price Expectation Survey, which is a survey of economists that all bring their opinions in to weigh in on the housing market, this is what they're saying. It's not what I'm saying. It's not what you're saying, but show this to somebody that has those questions. Always on all the KCM slides, if you go into the notes section of the actual slide, we give you the source report for all of these reports. You can send this report to the clients that you're working with that have these kind of questions. The bottom line with equity, though, is that homeowners have a greater net worth at every income level. And again, I know there's some folks that say, okay, we're going to rent, and they need to rent. There, some folks that are like, I don't know if I should rent or if I should buy. This is what we want to show them across every income level. When you start to look at it, homeowners have more equity. It's the chief way most people in this country accumulate wealth, and so we want more and more people to participate in that. I'm going to wrap up here in just a second. I'm going to bring Jessica back on and see if we have any questions. But a lot of times people ask me, how can I use these slides in the best possible way with people I'm talking to? And I want to give you a tool and a resource that we've created called the Perfect Listing Presentation. If you go to trykcm.com/listings, and we'll put the link in the comments here, you can go download a template for a listing presentation. We give that to you, and you can use these slides in your listing presentation. Now, we want you to become a KCM member and personalize those to yourself and use those in everything you're doing. But if you're a KCM member, we're going to put the link in there as well, so you see how you can go download that in the member area. But we're also offering it to people that are on the deep dive. They can go download the perfect listing presentation, and it gives you sort of a way to use these slides as you're sitting down at the kitchen table with someone thinking about selling their home. And that's our hope there. So Jess, I want to bring you back up and see if we have any questions today.
Hi, Dave. Yep, we've had just a couple of questions come through. The first one is from Mike, who asked, if the 18% of forbearance homes go into foreclosure, how will that impact the foreclosure market?
Yeah, that's a good question. Did you say it was Mike?
Yes, Mike Valley. Yep.
So Mike, 18.2% are in trouble. If every one of those went into foreclosure, experts last year pinned that number at around 300,000, 325,000. And if you went back here to this graphic, let me click on this real quick. If you look at foreclosure activity, if every one of those went into foreclosure, it wouldn't equal some of the prior years. And what are we hearing? CoreLogic and Adam data saying we don't expect that to happen. We actually expect the foreclosure rate to remain quite low. Why is that? Well, one of the big reasons is people have options today. I mean, anybody that, even if you bought a home, the first part of 2020 before the pandemic, let's say you bought a home in February of 2020, and you now are in trouble, you likely have 15 to 20% equity additional in that home, and you can sell it. You can pay a commission, hopefully put a little bit of money in your pocket, and move down the road in the crisis that you and your family are facing. And that's what we want for folks. So great question, Mike. But even in the worst possible scenario, probably doesn't bring us back to where we've been in years prior.
Awesome. And it looks like we just have one more question from Betsy, who asked, can that uptick in foreclosures be carried over from homes that were going to be foreclosed prior to the pandemic?
Certainly, yeah. So I think you're referencing this quote right here from CoreLogic. We may see a little bit of an uptick in foreclosure rates. I don't understand right now why somebody would be foreclosed on. I think that's on us and our business to educate people, maybe to do a video on it, maybe to put content out there to say, hey, if you are in trouble, you have options today, but it could be those that were in trouble, but those that were in trouble have the opportunity to sell. I certainly think banks today are not trying to foreclose on people. They're going to give people every opportunity they can to be able to sell the home so they don't have to get involved. So, but it could be that scenario. Anything else, Jess?
I think that was it. The only other thing I've seen a couple of times is people asking if they can access the replay and the slides. And I just wanted to remind everybody, if you're a member, you can access today's replay in the deep dive archive of your member area. I'll post a link to that, the replay and the slides. And if you're not a member, you can visit trykcm.com.
Perfect. Go download the perfect listing presentation. It's at trykcm.com/listings. We're grateful that you start your week with the deep dive. Share it with somebody. Share this information, because I think our job is to get out there and be the educator in the market right now. So have a great Monday, great Valentine's Day, and we'll see you back. We actually won't be back next week. It's President's Day next Monday. We'll be back the week following. So have a great week, everybody. Take care.